Order flow is one of the most important aspect in day trading. But when it comes to the social media everywhere, I think one frustrating that I always have is that all the videos you see, one trade, oh, that makes a lot of money, all those things. It does not make any sense for me if they're using the moving averages or chart patterns or like simplest things that does not have any kind of repeatable behavior. When I say repeatable behavior, when they show something, one trade, I made this much money. Okay, we need to show in terms of what is the strategy, how many times you were able to find the exact setup, exact trade, repeatable over the period of time again and again and again. What are the information you're looking for? That's something very, very important, because we as a day trader looking for only one thing: repeatable behavior, repeatable patterns, repeatable opportunity to see when we can enter, when we can exit, how we can manage our trade. That's pretty much it, right? So order flow is something very, very complex in terms of people to understand a lot of numbers. That's why institution and successful traders have built algorithms to interpret the data of fastest moving order flow. That's why they are able to make what they are making. We are most of the retail traders still looking at the moving averages, RSIs, or MACDs, anything, everything that is not going to give you the what you want to see in terms of the market. That is why we are struggling almost every single day in terms of the trading. I wanted to show you something very powerful, something works for me, something works for uh, our customers that we teach, something in terms of very simple to see, but of course you need a practice. You need to have the practice again and again to make sure you're able to see, you're able to enter, you're able to manage your risk, everything. But let's focus only on one thing today: trade entry. Okay, I'm going to focus only on trade entry. I don't want it to dilute too much into different things. Let's focus on trade entry that you can find it with one setup using order flow, and then something you can find repetitive, not in just one instrument. I wanted to show you something you can use in any instrument. It doesn't matter futures or like a ES, NQ, crude, gold, doesn't matter. Even it works on any other instrument. Particularly, I'm talking about stocks. I'm going to show you as well stocks as well. The reason why, personally, I started my trading career as options trader. So I know in terms of what is the benefits of both futures and options. Of course, I also have the stocks in retirement, but this strategy you can use in stocks that I use in my options as well as the futures. I will show you all those examples from last week, exact setup, one setup that I'm going to show today. You guys ready? Just want to make sure. All right. To start with, I wanted to show you this one setup I used from the on Friday, particularly on Friday. Not even multiple instruments. This is just one instrument, NQ. This is not any screenshot from the backdated or like a simulated trade. This is actual trade screenshot, the PNL. But I'm going to show you more than that. Before I'm going to show you the exact trade what I made, I'm going to teach you the strategy, and then I'm going to let you guys to tell me what was the trade I entered. Because if I'm able to achieve that today, I did my job. If I'm able to teach the strategy, teach the examples, everything, in the end, if I show you the screenshot on Friday with the NQ, and then I'm going to ask you a few questions, you should be able to find what exact trade I entered and then how. Okay, sounds good? All right. So most of the time, when I talk to a lot of new traders, they come with a simple goal in terms of I want to make $500 a day or $1,000 a day. Sometimes some traders say I want to make $2,000 a day, or someone will say like I want to trade micro, just $100 a day. Doesn't matter. But my point is the return trading profits is not uh, the goal we should have in terms of if you learn the strategy well, you become a successful trader. These numbers doesn't matter. We can make, if your goal is $500 per day or $2,000 per day, or doesn't matter, because once you become the successful trader, there is no limit on how much you can make. If you are struggling or like do the mistakes in terms of getting into your actual account, actual money trading without knowing what you're doing, you're going to end up a lot. That's why it all starts with, you need to have one strategy to start with. Something is proven before, something was successful, something you can confidently start practicing, start learning the strategy again and again and again. Make sure you're able to do it, execute it very well. And in order to learn that, you need to have the complete trade execution blueprint. That's what we are here for. We wanted to give you in terms of not just a product. Here's the product, go trade it. Now, we wanted to give you the complete blueprint in terms of these are the information you can see what is the meaning of those information, what's happening in the market, how we can enter, how we can manage, how we can exit. That's something we wanted to teach. That's what the blueprint we're talking about. We will provide everything you need, but something very important from you is practice again and again. Okay, make sure you practice on sim first. Sim first. If you are able to successful in sim, then move to funded accounts. I didn't say once sim go to the your actual account. I said funded accounts. The reason is that there is a big difference between the trading in sim versus funded accounts. You will have the market like slippage, actual execution, delays, rejections, everything. Because part of the learning, that's very, very critical, right? So that's something we highly, highly recommend. Okay. This is something I mentioned before. I want to repeat one more time. Making money in day trading is a byproduct of mastering the trading skill. Okay. That's why I want you to focus on mastering the trading skill first. Like what Bruce Lee said, I don't fear the man who learned like 1,000 kicks, but I fear the man who practiced one kick 1,000 times, right? That means a lot. It says one thing. You need to practice any strategy that you pick. I'm not talking about the strategy we teach on our products. Doesn't matter. As a day trader, you can pick any strategy, anything, just to make sure, as long as you know this is very powerful strategy I want to practice on, you have to practice again and again so that you don't you need to see it's coming and then you need to execute very well every single time. That is a skill. It takes years and years. Okay, so that's why I wanted to stress again, making money in day trading is a byproduct of mastering the trading skill. Okay, that's very important. Before you get started, please understand trading is risky. Do not trade any of your personal savings or in any of your personal money above than what you can afford to lose. Also, understand the CFTC rule first. That's very important. SEC and CFTC put together a lot of important rules and disclosures that you need to understand as a day trader. Risks involved, everything, particularly uh, hypothetical returns or results or stability, everything does not guarantee anything in future. Whatever happened before does not guarantee it's going to happen again. That's why it's very important for you to understand the risk involved in day trading before you actually get started. If you need to read the full disclaimer, you can go to buysideglobal.com/disclaimer. So let's step back. Okay, before I get into in terms of nitty-gritty details of the strategy, I wanted to go back to the very, very basic layman terms. What makes your trading profitable? Think about for a second. When you enter long or when you enter short, what makes your trading profitable? You need to understand this one thing. It's not like don't think too much technical analysis, all those things. Just think a little bit much more simpler. Meaning, once you enter long, once you enter long trade, you want the price to move after you enter the trade, right? That means you entered long, you have a stop loss, and that point, all you're looking for is price need to move up. That means you are you then only can realize a profit, right? But let's step back. if in order for price to move up, what needs to be there? That means once you entered long, when the price needs to move up, it will only happen when there are more buyers coming into the market buying the instrument that you already have a position on. That will push the prices up, right? So this is a very critical information, because when I say buyers need to come in more so that the price will move after you enter long, this is order flow, guys. When I say more buyers coming in after enter long, that is more. You need more order flow from the buyers than the sellers. Okay, that's very much very bound to the very common sense, basic common sense. Okay, that's why you need to have the look at the order flow in terms of what kind of orders coming in, what kind of liquidity is in the market, who is controlling the market. Those are the information you need to see to make sure you are on the right side of the market, or you can stay in the trade or exit the trade. Everything is based on the order flow that comes in. That's very important. Okay, you can find all the information. Most critically, when I say level order flow, I'm talking critically about level 2 market depth data that will show you the upcoming orders. As and when the orders coming into the exchange in terms of limit orders, you can see it right away. You can see it right away. Okay, that's why it's very critical to look at the order flow rather than looking at your past historical moving averages or like RSIs, all those things. Okay, here's the most fascinating part in terms of everybody knows in terms of almost every single successful traders or institutional traders or high frequency traders or like bigger banks, they do not trade without looking at level 2 or order flow data. Even they have advanced algorithms, everything to interpret the insights of the market by looking at only level 2 information. Okay, that is what their bread and butter to decide which side the market is flowing right now. But whereas the data traders, not even most of them, almost all of them actually, almost all of them don't even have access to level 2 market depth. All they have access to level 1 market data, looking at the moving averages, looking at the basic information, all historical data. And this is the biggest difference. Why this big difference? I'm sure my guess is it's the knowledge in terms of they don't know how to look at level 2. It's like fastest moving, just numbers coming in and out. It's hard to read, hard to find something. That's why if you can't read, what's the point of having it, right? So this is what I was talking about. When you look at the charts, if you're looking at anything, looking at the price movements with the moving averages, RSIs, MACDs, everything, it's all historical. What happened so far? How the price moved so far? That's what you're looking at. But if you look at the level 2, what I have on the right side is level 2 data. Within here, you can see the mouse. You can see that this is the DOM view. There's two views. NinjaTrader gives you two views of level 2. One is aggregating all the limit orders at each price level in the market. And also, it gives a detailed level 2. Detailed level 2 is going to give you by exchanges and also by the brokers also. If you have much more high priced level 2, they're going to give you by broker. If you look at here, the ID here, it's blank because I don't have the level 2 plus to see the brokers. But typically, if the institutions who pay higher subscription for the market, they can see by even by brokers, even by order code, they have in-depth information of the orders coming in. That's very important. Why? This is what is going to define the next price move. Okay, more and more buyers coming in, you will be able to see with the limit orders everything in the screen on the level 2 view. That is what is going to dictate how the next price action, or like how is the control between the buyers and sellers are switching, and also most importantly, at what price point, buyers are interested, or what price point the sellers are interested. Even by looking at here, you can see the numbers, and then right here you can see the highest concentration right here. At the same time, you can see it here. Those are information you need to look at when you're trading the market. Again, I'm not saying you should not, or like looking at historical data is useless. Still, it's very important only to gauge two things. Okay, price historical transaction will show you how price moved in the past. That will tell you most important information, the trend. What was the trend? Because that's very important. Trend beats everything. The trend beats everything, right? So that's why the historical price action you need to look at to find what was the trend and what was the market range. You need to have the information that I'm going to teach you as well, right? So that's why you need to look at historical pricing. One need to find two things: the trend and the range. With that information, you're not able to find any successful trade entries. Okay, all you can show is the trend and range. If you want to look at ideal way to enter the trade is by looking at the order flow. Why? I want to enter long when there are more buyers coming in so that I can join them. You cannot enter the long when more orders coming into the market with sell orders. That's like stupidity. Only way you can see is looking at the order flow, looking at the level two. That's going to show all the information that I'm talking about. So, like I said, the current order flow is what is going to show you the future price action where the price could move. And also, most important part that I'm going to show you in soon in the screen, something called buyers and sellers control and aggressiveness. This is what is going to decide your trade entry. This is what I'm going to teach you today in terms of how to find buyers control and sellers control and how it's shifting, who is aggressive so that we can join them. Why? Single trader, single contract is not going to change the market, right? It's not going to move the price. We need to see when there are a lot of buyers coming in together, they are like injecting like a lot of buy orders in the market. Your intention is to join them and then go with the trade. That is what the intention is. For that, you need to know who is in control, who is more aggressive, so that you can join them. Right? That is what the trade opportunity we are looking for. Also, the order flow is going to tell you which price points they have the control, buyers and sellers. That means we can not only we can find the entries, we'll also find the resistance and then the reversals as well. Everything is in there for you to see, but it's not easy to see. That's only the problem. But for you to see, it's out there. Okay, are you guys with me so far? I just want to make sure I'm not confusing you guys anything. Just want to make sure you guys are able to follow what I'm trying to say. All right. So this is something we talked about a lot, but I wanted to show you a little bit very quickly. This is the DOM screen I took a screenshot from. Okay. What you can see right here, this is nothing but bid and ask at every price level when the market is moving. Anytime you can see the current market price is highlighted by yellow if you open the DOM, and then you can see anything above pending ask, limit orders sitting in the market, and the bids sitting in the market. Think about for a second how the price action is going to happen based on order flow. Okay, just for a second. Right now, anytime at this point in time, let's assume the market order comes in to the exchange with the contract size of 100. Let's say if the market order coming in with the order of 100 buy order, okay, what will happen? Buy order will match the sellers or the ask. They are willing to sell 25 contracts at this price, 50 contracts at this price, 40 contracts at this price. Exchange job is to match your order. That's what they do, right? So once there is a market order, 100 contracts buy, it will take first 25 contracts at this price, fill it, and then next 50 order contracts at this price, and then remaining 25, they take it from here. They take the 25 from here, leave the 15 right here. Now, that 100 contract market buy order moved the price 3 ticks. Do you get what I'm saying? It moves 3 ticks. That's how the market moves. Market order, you cannot see because it comes in a flash, goes in a flash, you can't see. You will be able to see only when it already executed. But with the DOM, you can see the limit orders, which controls the price movement. Okay, what do I mean by that? In the same case, let's step back and see. Let's say there's a market order comes in with 1,000 contracts. Maybe, okay, now what? Let's take a simple 500 contracts. Let's say there's a market order comes in with 500 contracts right now. So how many ticks do you think it will move on the buy side? One, two, maybe 75, and then what? 115, something like that. It will go until here. It will move almost everything to cover to match the order of 500 contracts. They have to move almost every single tick, even beyond. You see this all under 50s, right? That means to fill the market order of 500, it's going to fill everything. It's got price move faster. Do you get I guess with me so far? Okay. And then let's say on the contrast, instead of the buy order 500 contract, if the sell order 500 comes in, looking at this, do you think it will move all the way down price? Absolutely not. Why? There are more sellers at these prices here. That means to fill, it may move like only like 6 ticks. That's it. By moving 6 ticks, they're able to satisfy the market order of 500 sell contracts. That's why the liquidity in the market is the most important factor of the price movement. Okay, let's say there is like instead of 50 here, let's say there is something order at maybe 500 and the 500 and 500. Doesn't matter how many buyers coming in with 50s and 100s, price is not gonna move because there are a lot of sellers who are ready to fill here. That means price is not gonna move. It's gonna stick over there. Okay, at the same time, if you have like a 10, 10, 10, 10, 10, there are less sellers. Somebody comes with the $500, 500 contracts. What's gonna move? Price is gonna zoom past it, right? That's why by looking at the level 2, you can see the liquidity, how much the buying pressure and selling pressure is controlling the price action. Are you guys with me so far? This is very important step you need to understand how the liquidity is the reason how the price moves. Are you guys with me so far? Just want to make, if you can understand what I'm trying to say, type yes. If you have any questions, type now so that I can understand before I'm moving to the next step. All right. Okay, yes, but slower. Thank you. Is it I'm speaking faster or is it like I'm going the slides faster? Just want to understand. All right. So anyway, thank you for the confirmation. Uh, Nilesh, we will send the recording for you so that you can definitely watch it again. But my point is the liquidity, the orders sitting, limit order sitting in the market controls the price movement. Whether it's going to move 10 ticks or just 1 tick is based on liquidity. Okay, that's the most important part. Let's move on. So this is why this level 2 information is the most critical for you to um, analyze to make a trading decisions. Okay, that's why most of you might not have level 2 market data subscription. You might have just level 1 because by default when you open the account anywhere they're going to give you only level 1. If you want level 2, you need to upgrade either it's in Apex or like NinjaTrader or like anywhere. You need to upgrade your data feed subscription to get level 2 more in-depth data. Then you can see all the information. Okay, then you start seeing all the orders coming into the market. It's a screenshot, but in real time these numbers move very, very, very fast. By the time you see the numbers is changing already. It's very, very fast moving numbers because every single second, microseconds orders coming in, matching, order coming in, matching, right? So that is exactly the problem as well. This is not something by looking at these screens as a retail trader you will be able to make any decision. If you can't understand, if you can't read, how well you can interpret the information for your trading. That's why these fast moving numbers is not going to help you by looking at the screens. You can see it, but it can make an indication. That's why we created our product called base liquidity zones. All right, so what we do, we take those all the information, fast streaming data, we apply our algorithm, try to find what are the most important price levels with higher buyers control or sellers control that we can take a look at and then make the trading decision. Okay, I'm yet to talk about trading strategy yet. Until now, I'm just trying to explain you why liquidity zones indicator is important, and also level 2 is important, so that you can find all the order flow data coming in the market in terms of level 2 on the screen on the chart right away. Okay, so like I said, we take all the information, find out the outliers, important, ignore all the noises. We ignore a lot of noises because order flow comes in every single price point, every single tick. We don't want that. We want to look at only the order flow that really matters, that really have the power to control the price. That's what we want to take a look at, right? So that's what we built the algorithm to reduce the noise, ignore the noise, look at only the important order flow information that you can use in your trading. Okay. Okay. Now let's get into the trading strategy. Again, I want to repeat one more thing. For your trading to be successful, all we are looking for is something repeatable. If this happens, sequence of A, B, C, D, if this happens, next something is going to happen. Next something is going to happen. We need to see the repeatable behavior, repeatable patterns. This way, we are able to find it little bit early when it happens next, so that we can enter the trade and then move along with the uh, order flow. That's very important. So what we're looking for, something repeatable behavior in the order flow, in the price action, that we can leverage as a tradable opportunity. All right. So being that said, I think let's look at one strategy, one behavior, one repeatable behavior on with order flow. Okay, there are a lot of other opportunities we have, but I don't have the time to go through everything, but I'm going to go through only one. The reason I picked this one is because this is the high probability. This have higher probability. Nothing is certain, but this have higher probability. I trade every single day. Okay, that's why this is very, and also it's very easy to read. That's much more important information. Okay, so trade entry setup number one. This is what I'm going to talk about. I'm going to talk about in terms of how we can enter the long and enter the short. Again, we need to wait and see when buyers take over sellers control. This line means nothing. I just want to show you out there. You will understand only when I show you the screenshots, only when I show you the actual trade opportunities. Okay, so for now, all I want you to remember is that buyers need to take over the control from sellers if you want to take long. Okay, buyers need to take over the control from the sellers if you want to take long. On the contrary, if you want to take short trade, not reverse, if you see sellers are taking over the control from buyers, then it's a short entry. Okay, now let's look at a little bit more in detail. So we did saw these lines, right? I mean, you see this one, these lines are sellers control. These are sellers control in terms of lot of orders coming in these levels, and then the greens are like a buyer's control. Not only those lines, you can see the brightness of the red will be increasing or decreasing. That is to signify its seller's control is increasing or seller's control is decreasing. So remember, based on order flow, liquidity zones is going to print you on the chart the buyer's control and seller's control. Okay, buyer's control will be on the green, seller's control will be on the red. The brightness of the color, more bright red means more higher seller's control, brighter the green means more buyer's control. Okay, with that information, let's go back to the strategy in terms of market. When the market gets in any kind of consolidation or a choppy region or something, you will clearly see the buyer's control below where the price is bouncing, and then seller's control where the bouncing downwards. You can see those consolidation. Eventually, either side, any one of the side price is going to break out. Okay, when the price breaks out, we need to see something very important. We need to see how it's changing the control. In this case, you can see the red is the seller's control, red is seller's control, buyer's control, buyer's control. What happened here? Buyer's control is shifting and taking over the place from seller's control. That is exactly what you're looking for. So it will look like, so this is what we are exactly looking for. We wanted to look at the opportunity where seller's control is lost because of the breakout, completely lost, and then buyers shifting their control from here, this price line. Can you see my mouse movement? It's very critical. You can see my mouse movement. From here, buyers control shifting it, okay, moving it here. Okay, this is what is going to give you the trade opportunity. Okay, and this is where you're going to enter. When you see the power shifting from sellers to buyer, at that point you're going to enter long. Okay, reverse is same thing. When the sellers are taking a control from the buyers, you're going to enter short. Okay, being that said, let's look at the chart. Let's look at the chart in terms of um, I know the lines are a little bit thin, but can you guys see the green and red lines? Can you guys see the red lines? I want you to ignore these purple and blue lines. These are all the order flow, unconfirmed order flow, but it's coming in. But we are going to ignore anything is not confirmed. Algorithm is going to reduce all the noises, but still going to plot some of the order flow. It's not confirmed, not reliable in blue and purple. All your eyes, all your focus should be on the red and then the green. Okay, with this, whatever I showed you, you can see. Remember that buyers control need to shift higher and then taking on sellers. With that in mind, look at the order flow in terms of right here. Market was stagnant. You can see the green control, buyers control way down here, sellers control way down here. Breakout, price moved up here, control moved up here, and then sellers again it's breakout, sellers buyers taking on the control. This is what we're exactly looking for in terms of buyers need to take over from the sellers. Buyers need to take over from sellers. This will happen again and again. Okay, so let's make it very, very clear in terms of we'll take the trade only at the exact price. When I say exact price, let's look at this is exact price line. Seller had control, right? The exact same price, buyers came in. With that mindset, I want to look at this chart. Okay, look at this chart. When the market opens, sellers control is here, buyers control is here. Eventually, buyers move the control up until I don't take the trades here. Why? Because still it's a buyer's control area, seller's control area. But look at this particular part. Can you see this level right here? Seller's control was lost. Exact same price, buyers took over. Can you guys see this one? This is what our high probability trade setup that we are looking for in order flow today. This is something you can find it every single day. Okay, so this is the first opportunity. Okay, after that, price did not take over any other seller's zone. That means you enter here. I'm not talking about exit today because that's another in-depth topic to discuss. I'm going to discuss only the trade opportunities, trade entries. Okay. Okay. Who can tell me where is the next trade opportunity? Just tell me the time in this chart. Just type in the comments or question section which time the next opportunity. Exact again, what I'm looking for is the sellers control the same price level. Buyers take over after breakout. Where do you see the next breakout happen? Okay, Nilesh replied 12, 11:45, 12:15. Everything is correct answers right here. Breakout happened right here, but buyers are still here. Buyers are still here. Okay, I don't want to enter because still the buyers can sellers can reestablish their control. What do I mean? Look at this. Sellers or breakout can reestablish control. See this one? I don't want to enter. But moment I see sellers the same price level, buyers shifting the control here, this is the opportunity, guys. This is what we're talking about. Okay, we need to see the same place. So we saw opportunity 1, opportunity 2, opportunity 3. Do you see this? Opportunity 3, opportunity 4, opportunity 5. Do you see this one? Okay, after this, buyers did not move at all. Can you see that one? Buyers did not move. Buyers stayed there. What happened? Why? Sellers are pushing the price or taking or the control. They are started pushing it down. Are you guys with me so far? Opportunity 1, sellers to buyers, sellers to buyers, sellers to buyers, sellers to buyers. Again, not this one. There's nothing here, but from here, sellers to buyers here. Okay. Okay. Buyers did not move from this. They stayed there. Sellers eventually was able to move the control, take out the control back again. They started pushing the price down. See the seller control down. Okay, now after this price line, who can tell me where is the next trade opportunity? Where is the next opportunity after this price point? Okay, I hear 13. I hear 13. Well, you guys are on the point. 13, yes. Why? Buyer's control was broken and then went back and retested, and then the seller's control was established right here. This is the okay, so this is the trade opportunity. But after this, look at this. There is no opportunity at all because sellers remain the control here, buyers remain the control here. Market did not give me any opportunity, and so market moved sideways as a choppy region. Are you with me? This is how you can see base liquidity zones is going to give you much better, clear, readable, tradable opportunity based on level 2. You guys cannot find those information by looking at these numbers. These numbers, you cannot make any decision. These numbers are fast moving. But same thing, if I try to algorithm can help you to find those things, then you can find all the information in terms of opportunities. All right, so this is what it looks like on a choppy day. Okay, I showed you the good day where you can find the great opportunities. I want to also show you the bad day where buyers know where they are, sellers know where they are, nobody giving up the control, so that means they stayed there, buyers stayed there, market didn't move. That's it. That means there's no third opportunity. Even if you enter the trade, you're going to lose because market is going sideways absolutely. But one thing I'm not teaching today is other opportunities. Liquidity sweeps. I don't want to confuse you. Liquidity sweeps is another powerful trade. Okay, but you will learn those things once you buy the product. We'll give the training videos, everything. So liquidity, for now, we are looking for the breakout trade. It's not happening here. These are example of the day we don't have those things. All right. Okay. Let's look at. Okay, now remember that the first slide I showed you today, this morning, of the $1,000 I made from NQ Friday, August 23rd. Okay, it's not like 10, 20, 30 trades. It's very, very few trades. But one of the trade was the setup I taught you today. Who can give me exact trade what I took on a Friday? Give me the time. Give me the time what trade I took on Friday. That exactly what I thought today. Okay. Exactly. So when I saw the buyers were here, price almost retested multiple times, but it finally broken. Sellers came in. This is where I entered. So I'll teach you in a video separately when you buy the product about risk management in terms of wait till your risk is less and then you enter. You can see the price controlled this region for a long time. This is where I enter. This is the absolute like bias control, same price line. Sellers take over and then they never let the price go beyond this level. They held the control for a long time. When did the control was lost? Liquidity was swept. Look at this. The control is gone, guys. Look at this. When the control is gone, what happened to the price? It can go anywhere. I'm not saying it will go up or down. When the control is gone, you will not know which side the price is going to go until you see the new control comes in. Okay, this is what the trade that I showed in the first slide of my trades coming in. Of course, I took other trades, liquidity sweeps, but today I'm teaching this particular setup. That's why I want to show the screen. Are you guys with me so far? How do you confirm the entry? How do you confirm the sense? For me, this buyers became sellers itself the confirmation of my trade, but I have one other confirmation, but I don't want to confuse it today. We'll get there eventually. But if you wanted to learn complex structures and complex confluences, let's start with the basic foundation of one thing we need to see. This is how the breakout trade works, how we can trade. All right. Okay, so not only those things, these trades happens almost every single day. And then you can see again, let me run it through fast. I think we're running out of time. You can see again, the sellers bias was continued for a long time, breakout, sell happens. You can see that this is another opportunity on the NQ. And also I want to show you ES also, in terms of I trade three instruments every day as and when the opportunity presents: ES, NQ, and crude. Those are three instruments I trade. Again, you can see the market was choppy for the whole time. When you can see the seller's control was broke out here. So a lot of people, oh, it's broke out, and then we enter the trade. What happened? Reverse. They lose all the money and shit, completely gone. They are robbed completely. So, but if you look at my strategy, do not trade on breakout. Wait till the control shift. Look at this. Breakout happened. I didn't take the trade. I don't want to take a trade because my setup doesn't work. And then what happened? Sellers take over again. Took over the control again. Move down. And eventually, when the second time the buyers sellers are broken, I can see the control shifted again. Control shifted here. And then these are things you look for in terms of anytime you look for the confirmation. Wait till the control shift in the same place where the sellers lost the control. On the reverse as well. All right, are you guys with me? I trade. One of the question was, what time frame do you use? I trade 1 minute most of the time because I want to see the price action as it happening. I also have another chart for a different supply and demand with the custom price chart. But for liquidity zones, I use 1 minute or 2 minutes. The reason is that 1 minute is some market is really moving fast, and then like sometimes the bar is like 6 ticks, 7 ticks. For me, I need to enter a little bit early. So for me, 1 minute gives me that kind of opportunity, because risk management is everything. That's why I use 1 minute or 2 minutes. When the market moves really fast, 1 minute. Market moves very slow, getting choppy, I use 2 minutes to consolidate. Hopefully that answers it. So okay, let me have to show you the crude as well. You can see the crude again. You can see market was choppy, sellers control, taken buyers control, and then it's all choppy right here. And then here it's taken over the control again here. So this is something you can see is not only for NQ or ES, any instrument. This strategy works very well. So as long as you're able to uh, backtest and not backtest, practice it again and again, you'll be able to see in terms of even here, market was choppy, control was here so much time, broken out, still control was here, but broken out, control was here. So you will see those patterns again and again and again. So you can something practice much more reliably. Okay, I want to show the power of this indicator as well as the strategy. I showed you ES, I showed you NQ, I showed you crude. I told you I'm option trader. I also trade stocks for options. This is Nvidia from last week. Okay, Nvidia from last week. One thing about stocks compared to futures, stocks moves gives you the opportunity in the morning. If the reason I loved options is because you can trade just 2 hours in the morning and then you're done with it, right? So anyway, so my goal is to show it also works for stocks. Okay, so now looking at stocks, who can tell me again the opportunity that you can enter the trade here? The way I look at the opportunity and then I enter in my station, Thinkorswim. I move from station to Thinkorswim. Thinkorswim for the options, but all my analysis, all the entries I make still on any stock on NinjaTrader, because this is where I can see liquidity zones. Okay, so 9:30. Yeah, exactly. So market was like finding its range, but eventually it was broken um, here. But you can see 1 and 2, both places. After that, market nobody, sellers have the control here, buyers have the control here. That is opportunity. But I had the opportunity right here. Okay, so again, I want to show you one more from the again stocks from here. Same thing. You can see that repeating again and again. Any instrument you can see, even if it's late hours as well. Okay, I showed you only one setup, right? I think breakout and then the control shift and swap from buyers taking off from sellers. It's a long. From the sellers taking off from buyers, it's a short trade. And then I showed the examples how we can trade. There are a lot of other opportunities out there. in terms of liquidity sweep trade, liquidity run trade, liquidity reversals. So these are all the exact same chart, everything, but you look for different patterns, different reversals. You look for other confluences, but you can always start with just one setup. One setup, practice again and again before you can add more and more setups. So, but we will teach you all those things. You can pick if you want to trade all together, but my recommendation is always practice one setup for a long time, so that too one setup with a higher probability. That's what I showed you the earlier one, so that you can once you practice that,